How could Basel III rules impact banks' ability to support their capital market activities?
I really see the Basel III compliance is not just about ticking the boxes. It's really about building that resilient and sustainable banking system. So if we look at a bigger picture around Basel III and what it's going to require for the banks, engage with those industry experts, really to try and stay informed on the regulatory updates, collaborate with other banks. So really the impact, think of it first, I like to think of it as the broad impact and then kind of dive into the different type of requirements that it's asking for.
How will it impact the services you offer your clients?
Technology, whether it's with, of course, Fenergo, which we prefer, regtech solution is really going to enhance the compliance ability behind banks. So if the banks do not already have a regtech solution or a tool that will come in and help facilitate the requirements, they're going to be behind. So really, we see technology as bolstering the ability to meet the requirements. The tools can do, the risk assessments. They can prioritize the rules engines around the compliance work that you're doing. So then you get a little bit more into that tick the box. What are you doing to become compliant with the requirements? And of course, technology is going to enhance that ability.
What is going to be the hardest part for the banks?
There's going to be a lot of nuances that banks will need to comply with. Probably the most is just the amount of change it's going to bring, really particularly around the calculation requirements to meet. I think that will require more modeling, risk-based modeling for the capital requirements. So that's probably the biggest impact, is that that's just going to be something new for the banks to do.
Yeah. Any unintended consequences you see?
Risk modeling, which is a very sort of niche market, we might see that regtech compliance companies like ourselves will be asked to do more of that risk modeling, which really that's a specific nuance. It's not something that our platform even does. So it'll be interesting to see what technology is sort of driven, technology innovation is driven out of these new requirements. And, really you see that all the time. I mean, we saw it with Dodd-Frank. Anytime you have new regulatory requirements, you tend to get this innovation of technology around that in order to meet those requirements. So it's going to be really interesting to see what comes out of this requirement as well.
What is the timetable?
My expectation, which is based on past regulations, is really that I think the regulators they're going to be forceful and hard on the requirements for banks, but I think they'll also be patient. This isn't the only new requirement coming out right now, so they understand that banks are under a tremendous amount of pressure. I think the importance for banks is to communicate often and regularly with the regulators, be completely transparent where you are as an industry or as a bank in meeting the requirements. I think that's what regulators want, right? They want that open communication. So if banks are not ready to meet the requirement, they need to be having those conversations with the regulators and a plan. What is the plan to be able to get there?
What is your advice for a bank that doesn't have a plan?
Start. Get ready. Be familiar with the regulations. Create a strategy. Have a strategy for data, because we know that the data behind it is always a big hurdle to get over, and involve more than the operations team within that strategy. Involve all the lines of business, including compliance, legal and compliance, operations, and your risk modeling team that's going to be doing the quantitative work. So really start the strategy, include all the teams to get the holistic view, and talk to the regulators, let them know what the plan is and get feedback.
Can these rules lead to a new wave of consolidation?
It's going to bring some more transparency across the industry. That transparency may kind of kick off some consolidations. The whole idea behind the regulation is to bring that safety and soundness to the industry. So maybe it might shed light on some gaps, or maybe it shows the strength of the industry as a whole. But I do think that it's going to bring some transparency there.
What has been your strategy for preparing your customers?
It allows for some new conversations. So when we're talking to our existing clients and even prospects, really this regulation kind of brings out the ability to ask the question, have you assessed your technology and your data infrastructure? Now would be the time to do that. Really, now is the time to consider investing in that regulatory technology to facilitate changes such as this, especially big changes like this. And, the regulators have given a broad time to implement this over the next 3 years. It may evolve, it may change over that time, but the foundation of your solution from a technology perspective will not change. It'll really allow you to put in place the tools to bring that foundation and really consider the broader impacts of Basel III. So on your technology infrastructure, on your risk culture, your organization, and your compliance program as a whole.
Do most banks use third-party providers like Fenergo or build the technology internally?
What we are seeing, particularly since we've moved to cloud and SaaS technology, is that using a third-party provider not only brings you the expertise that they have, particularly one that's been in the industry for as long as we have, it brings the experience from global banks down to even regional banks that you just aren't going to find in-house, and just the maintenance and the configuration and the expertise and the ease of the build. Now, it makes sense for banks to go out to third-party providers. And the cost, the efficiency, it's just a no-brainer for many banks.